Good morning and welcome. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Like the name suggests, we try to get you everything that you need to know to start your day on the right note. Let's start with the headlines. U.S. markets see profit-taking as Dow snaps a 9-day winning streak. The Dow Jones falls 1.3%, while the S&P 500 and the Nasdaq Composite both fall at least 1.5%. Asian markets follow suit, with all major indices opening lower. Back home, Indian equities witness a sharp fall in the last 2 hours of trade. The Nifty 50 logs its biggest one-day decline in 10 months. All sector indices close in the red. Zee says Sony has agreed to discuss extending the merger deadline. Meanwhile, Sony is yet to make an official statement on the matter. Road Transport and Highway Minister Nitin Gadkari says that the government will introduce new technologies, including GPS-based toll collection systems, by March next year to replace the existing highway toll plazas. And India reports 21 cases of the new COVID-19 variant JN1, as per the government think tank Niti Aayog member V.K. Paul. Sources tell NDTV that Goa has 19 cases of the new variant, while Maharashtra and Kerala have one each as of 4 p.m. yesterday. Now, we're continuing to track the disruption of maritime trade on account of attacks by Houthi militants in the Red Sea. And according to the latest report, which quoted a large global logistics company, more than 100 container ships are taking the long route around Africa to avoid violence in the Red Sea. And while the U.S. has initiated a peacekeeping force, there's no clear information on that yet. According to that Bloomberg report, companies are also starting to look at using rail and air routes instead of the Suez Canal route, which accounts for about 12% of global trade. Now, that uncertainty is also weighing on risk assets globally, seemingly. Overnight in the U.S., there was selling on Wall Street, with the three benchmarks losing over 1% each. The Dow, in fact, falling close to 500 points, while the S&P 500 and the Nasdaq 100 dropping about 1.5% each. In the Asia-Pacific region this morning, it's red across the board, with the deepest cuts in Japan, Hong Kong and South Korea. Those two markets seeing cuts of about 0.75% or thereabouts. The Hang Seng, in fact, recovering just a tad bit and trading with cuts of about 0.5%. Chinese onshore markets are trading just about in the green. And this is, by the way, despite the further decline in the U.S. bond yields that we've seen, the 10-year currently trading just below that 3.86% mark. Let's put some of this in perspective for you. Dean Kim, Head of Research Product at William O'Neill, joining in. Dean, thanks so much for taking the time this morning. And the question that I have for you is, the cut that we saw was quite sudden and sharp in the Indian equity markets, and we're trying to understand whether this is part of a global move away from risk assets, or is it something that happened because perhaps people thought that India was a little overbought?
Yeah, I mean, certainly India continues to be heavily overbought after making year-to-date highs. So, we did see a pullback to the 10-day moving average with the 21-day moving average as the next level of support. So it would be, in my opinion, it would be important for the market to find support there at the 21-day moving average, as the 50-day moving average is another 3% below the 21. Yeah, it's really not a particular surprise. The markets have been overbought. Same thing within the U.S. as well. We're approaching year end, and perhaps a lot of the funds, they're wrapping up for the year. I think it's important for the markets to sort of find support at the short-term moving averages.
What do you think are the major cues? And of course, I would think that there's going to be a little bit of stunted trade towards the end of the year as people head into the holidays. But what do you think are the major cues that one should watch on the global scale heading into the new year?
I think for the U.S., we're keeping a close eye on the consumer, the health of the consumer. Basically, when we look at holiday sales, which is upcoming, that's expected to be robust. However, when we listen to companies like Walmart and other retailers, they're suggesting that they're already seeing a sort of slowdown in consumer buying. So I think that's going to be the key. In addition, we're going to be keeping an eye on banks' earnings to see if asset qualities are going to deteriorate, because that heavily depends on what consumers do. So I think that's going to be important. And it's a welcome news that the Fed is going to be, sort of lowering rates as we head into next year. But we're also going to keep a close eye on corporate earnings. Right now, the market is expecting sort of 10-11% increase in earnings. But if the Fed is going to lower rates, that would suggest that they see sort of pressure within the liquidity part of the market. So it's going to be a fine balance as we head into next year. So a lot of moving parts. But we're taking the cues as data come out.
Final question, and this relates to the Indian markets from you looking from out in. Are there any pockets that you think are clear buys at this juncture, or would you say that it's better to wait on the sidelines for just a little bit to understand which way the wind's blowing?
Yeah, I mean, yesterday's correction in Indian market, that was certainly a jolt, no doubt about that. So I would wait for, the market to settle, see if it can catch support. Right now, we're sitting at the 10-day moving average for Indian market. Should the market bounce from here, that's great news. But if it recedes, then you have the 21-day, which is about 2% below. Like I said, I think it's important to find support there. If you do see, support and the market bouncing off of short-term moving averages, I would look at, financial sector. Looks particularly attractive at the moment because a lot of stocks are breaking out of early stage spaces. So, like companies like IndusInd Bank, State Bank of India, you have Punjab National Bank, even smaller companies like Cholamandalam, Muhud Finance. These are all stocks that are sort of breaking out from early stage basis. And then other areas, I think there's some, opportunities still in consumer cyclical, consumer staple, stocks like Bakaji Foods, Varun Beverages, Radical Khaitan, even Titan Company. The stock setup looks fairly attractive.
Fair point. Thanks so much, Dean, for giving us that perspective and for joining us this morning.
Thank you.
All right, let's also bring you an update from the F&O space. And remember, this is weekly expiry, and we could be set for a little bit of chop and churn. Agam is here to tell you what to look at specifically. Agam, morning. Well, you saw, somebody looking from out into the Indian equity markets, and he mentioned a few levels. Do those factor in what you're looking at as well?
Yes, certainly. So yesterday, it was all about the markets going down and volatility moving up. At the moment, some amount of nervousness setting in, and this has taken a lot of traders as well as investors by surprise, given the fact that we in fact were trading at life highs earlier on in the morning and eventually closed substantially lower. And at the moment, while we see the Nifty looking at a cut around 1.5%, the questions have now risen as to whether or not we can in fact expect follow-on selling at this point in time, with an open interest increase of around 2.5% towards fresh shorts already. With the bank Nifty, of course, so that's where we are once again not seeing too much in terms of change in open interest, but we have seen that index come off sharply as well. Remember that we were expecting the weekly options expiry to come through somewhere around the mark of 48,000. We are well away, a good 500 points away from that mark. Now, let's talk about the Nifty option scenario, because at this point in time, we are going to also address today's weekly Nifty options expiry, and now once again all the activity has shifted back below the mark of 21,500, and the range at the moment between 21,000 as the puts with the max open interest, which would perhaps provide a little bit of support. But should we open below that mark, we could further see unwinding as far as these puts are concerned, and in fact at that point in time the mark of 21,000 22,000 may also be in danger. On the higher end, the 22,000 level has been completely out of the picture, and at the moment we're keeping an eye on 21,500. In fact, that's the one with the most amount of open interest accumulation through and through across the options universe. Now, as far as the change is concerned, naturally on expected lines, we saw a lot more in terms of change in the calls, an increase, a lot more writing coming through out there. Let's talk about stocks then, and naturally there will be a lot of weakness. So we did see a lot of shorts building up in Abbott, HDFC AMC, Ultratech Cement, Astral, along with Tech Mahindra. Overall, the breadth wasn't great at all. Well, that's safe to say that we saw further longs unwinding in a handful of these counters as well, like Delta Corp, IRCTC, Dixon Technologies, Coal India, as well as Granules. So it certainly was a weak day, and the question is whether or not we do further slide from these levels, and if we do, where do we stop, Alex?
Certainly. All right. Thanks so much, Agam, for bringing us those details. One of the factors in trade yesterday, seemingly, that was causing a little bit of concern and, may have contributed to some of the selling was the latest updates on a new variant of COVID-19. Now, an NDTV report had said that 21 cases of the new variant have been confirmed in lab tests. Union Health Minister Dr. Mansukh Mandavia has also chaired a meeting apparently with all the states and union territories and their health ministers in order to take stock of the situation. And after that meeting, Niti Aayog member Vinod K. Paul spoke to the media about the meeting. Here's what he had to say.
देश में as per our records लगभग 2300 एक्टिव केसेस हैं. कल कोई 519 केस रिपोर्ट हुए हैं. इसके पहले 2 हफ्ते में 10 दिन में 100-110 इस तरह से केसेस आते हैं, लेकिन ट्यूसडे की रिपोर्टिंग वीकेंड की कई बार हाई होती है. ये वो भी हो सकता है, लेकिन हो सकता है कि प्रभाव इस सिचुएशन में इस स्वरूप में कोविड-19 का बढ़ रहा है. ये हो सकता है. केरल में केसेस हैं, तमिलनाडु में है, कर्नाटक में है, खासकर गोवा में भी थोड़ा कंसर्न है. तो एक नई थोड़ी सी आउटब्रेक जरूर सामने आई है और ये भी देखने में.
All right, so that's the latest update on COVID-19. Remember to check back with us over the course of the day, and we'll bring you as many live updates as we possibly can. Now, before we turn to stock-specific action in the secondary market, let's get you an update of what's happening in the primary market as well. And you probably know that there have been quite a few IPOs hitting the Lal Street in the past couple of weeks. We've got Himansh joining in to give you an update on those that are currently open. Himansh, morning. What do you have for us?
Good morning, Alex. The primary markets are buoyant as ever, and you have quite a busy week here. I'll start off with the first listing that's coming in today. You have Inox India with IPO, which was subscribed nearly 62 times, largely by institutional investors, will be listing on the bourses today. So investors would be, eyeing out for the listing premiums that they'd be bagging in. But moving on, you have Innova Captab, the Haryana-based pharma company, will be opening its bid today. The 570 crore IPO comprises of a 320 crore fresh issue and a 250 crore offer for sale. The promoters here are primarily looking to dilute their stake from 67 to 52%. And the company has a couple of key value propositions. For example, its client list includes 14 of the top 15 Indian pharma companies as it undertakes contract manufacturing. The company also supplies to international markets, some very attractive ones such as Kenya, Afghanistan, and Sri Lanka. Before subscribing, however, investors do keep in mind that its reliance on imported products and raw materials from China and Hong Kong do pose some expose it to geopolitical risk here. And moving on to the subscription updates that are coming in from RBZ Jewellers, the IPO closes today, and as of yesterday, it was subscribed nearly 7 times. Institutional investors coming in at 5%. Happy Forging subscribed 7.47 times. Credo as well subscribed nearly 7 times. And lastly, Azad Engineering, for which the IPO closes, the bids close in tomorrow, subscribed 3.31 times. So strong interest on all counts seeing in the primary markets.
All right. Thanks so much, Himash, for bringing us those details. Now, before we get into stock-specific action, let's also pull up the GIFT Nifty and see what the indications are for the start of trade. And we generally get a bit of a sense of how things will open. As things stand, the implications are for a bit of a wobbly start, and we'll have to see if that pullback continues. Remember, as Agam pointed out earlier on this program itself, today is weekly expiry, so you could see quite a bit of chop and churn over the course of the day. Now let's turn attention to one stock that is likely to see action today, and it has been quite volatile in the past few days because of uncertainty, and this is Zee Entertainment. The question marks around the merger with Sony were getting bigger and bigger. But there was an update yesterday where Zee informed that Sony has entered into good faith negotiations about the merger deadline extension. Sajid is joining in to give you some perspective on that. Sajid, I think it was an open question as to whether or not this deal would take place, but now we have a little bit of certainty. What happens from now?
That's right, Alex. If you look at the entire timeline of how this entire merger is playing out, it seems that it's some kind of time buying which has been done to make sure that both the parties come on the table, communicate with each other, and settle key issue, which at this point in time is who's going to head the merged entity once Zee and Sony merges. Zee had requested for an extension of timeline. Sony has responded saying that it's willing to sit on the table and look at the extension, but there's no clear timeline which has been defined or how much extension will be done. As per the agreement, there are 3 extensions that's possible between the two parties, and we have still not got a response from Sony whether it has agreed to extend the timeline. It's just said that it's coming on the table to discuss an extension, and by the way, December 21st today is supposed to be a day when this merger should have been completed by, but it's not getting completed and it's going to be extended. And it seems that from the current way how things are panning out, it's not going to be a short-term extension. It will take a couple of months or maybe quarters before the entire Zee-Sony merger plays out. Which way it plays out, it depends upon how they are going to negotiate on the table. But there is few things at stake here, whether Puneet Goenka will remain as the MD of the merged entity. The second thing, if the merger doesn't go through, then there is at stake is the FDI which is going to come in of 10,000 odd crores. So there is this is something which is will be watched out by the market very closely, and it's not going to happen in a quick time.
In a hurry, right? Thanks so much, Ajit, for bringing us those details. Certainly one to watch out for in trade today. We have to slip into a very quick break. We've got more action for you on the other side, so do stay tuned. Welcome back. You're watching All You Need to Know. Now, the Drug Controller General of India has asked the manufacturers of popular anti-flu and anti-cold drugs to carry a warning against their use for infants and kids younger than the age of 14 years. We have Varsha joining in to give us some details as to who will have to now put out these notifications. Varsha, what do you have for us?
Good morning, Alex. So as you rightly said, so let's go ahead with that. So drugs containing chlorpheniramine and phenylphyrine in specific units will not be prescribed to infants below 4 years. Now, DCGI has asked manufacturers that a popular anti-cold and flu combination should not be prescribed for infants and children below 4 years. Now, if you see, manufacturers will now have to mention a warning regarding this use on their labels and packaging. Now, these ingredients are actually used for the treatment of cold and which helps to relieve runny nose and sneezing. Now, the important point is who gets impacted. So you've got Sun Pharma and Glenmark Pharmaceutical, Ipca Lab and GlaxoSmithKline who have, these companies have cough syrup which contains these ingredients. So technically, they will have to change the labeling of this product, and they'll have to put the warning for the same. So this is actually the update on the pharma.
All right, thanks so much for bringing us those details. Let's talk about Flair Writing, which has announced its Q2 results. Tarson's Products completes the acquisition, acquisition rather. Those are stocks that you need to watch out for in a trade today, of course, and we'll try and get you more details in just a bit. For now, let's talk about Mazagon Shipbuilders and Cochin Shipyards, which have bagged big orders from the Defence Ministry. We've got Mahima joining in to give you some perspective on that. Mahima, what's the size of these orders?
Right, Alex. Good morning. So if you see, Mazagon Dock Shipyard has been literally receiving orders left, right and center. The recent order that it received from Ministry of Defence is for 15 crores, and the order is for construction of patrol vessels, and this is for Indian Coast Guard. Recently, they also received order worth rupees 52 million from a European client, which was really big, and their order book as of September stands at 37,500 crores. They also have an expected guidance of 12 to 15% increase in the top line by 22-23. If you see, Mazagon Shipdock has seen a massive increase in their market valuation also, since their share prices have surged over 143% in the past 52 weeks. Talking about Cochin Shipyard has also received an order from Ministry of Defence for 488 crores, and this is for repair and maintenance of equipment and systems on the naval vessel, and the project needs to be completed by 2025. Their order book as of September 30th stands at 22,000 crores, and the stock performance, if you see, has been pretty good. 6 months it was up 12%, and 1 year it has been up over 105%. So these are the two stocks that are definitely on the radar for today.
All right, thanks so much, Mahima, for bringing us those details. Just, by the way, I was mentioning Flair results, and the Q2 results are out. In fact, the revenue came in at 257 crore or thereabouts, and that's an increase of about 4%. The EBITDA has risen about 2% as well, and the margins have come in just about 40 basis points lower versus the comparable quarter, and it stood at as much as 20.94. The net profit is up just about 3% or thereabouts at 3 crore or thereabouts. The update with Tarson's Products is that it has acquired a company called Nirbi R&D and Nirbi Plus excuse me, for 10 to 15 million euros, and the target businesses are involved in medical and laboratory disposables rather. The turnover of those two companies is as much as 16.1 million euros in the calendar year of 2022. Let's talk about a few brokerage updates that you should watch out for. And Motilal Oswal has continued to maintain a buy rating on Godrej Properties, which an increased target of about 2,300 rupees, and it has also maintained a buy rating of with a target of 1,700 for Birla Corporation. My colleague Mihika is joining in to give you some more details there. Mihika, what do you have for us?
Good morning, Alex. So first, I'll start with Godrej Properties. The 2,300 price target does imply a 22% upside to the current market price. costs. Now, earlier, the margins in the past of the company were impacted because the company had over-reliance on the lower-end mid-income project in the past. So the company has shifted the focus to the premium side of the mid-income segment, and they're trying to bring the cost of construction down in proportions to the sales. Now, with request to the markets, they're going to focus on the 4 existing markets, which is the NCR, Mumbai, Pune, and Bangalore, and they will add 1 new market, which is Hyderabad. First, they will double down on the existing markets before expanding, and they'll pursue the plotted development opportunities in the Tier 2 cities. They have around 20 Tier 2 cities that they currently have planned in their project pipeline. The company is also de-risked with new projects worth 35,000 crores added over the last 18 months, and the management says that the sales potential of these new products will help them help the company achieve a 10 to 15% net profit margin, and the robust pipeline will help them deliver sustainable growth. And the new launches are also set to make and generate positive free cash flow soon. The company also targets to increase the increase in realizations to help achieve a 20% plus ROE. Now, moving on to Birla Corporation, Motilal Oswal does maintains a buy rating at the 1,700 target price, which implies a 25% upside. They also expect the revenue CAGR over FY23-26 to be 8.5% and the volume CAGR in the same period to be 8%. They also expect the EBITDA margins to increase to 14 to 16% over FY24 to FY26 versus 9% in FY23. Now, there is an update regarding the Mukadban plant, and Motilal Oswal says that this will help the company. The plant has seen challenges in the past with respect to commissioning, ramping up. The higher input costs and the lower realizations did impact the profitability in the past. But however, the plant did become EBITDA positive in March 2023. The capacity utilization, which currently stands at 46%, will increase to 65 to 70% in FY24. And the company also targets the EBITDA per ton improvement of 300 to 500 rupees in FY24. The coal mines that are going to get commissioned will help the company fulfill their fuel requirement costs too.
Right. Thanks so much, Meeka, for bringing us those details. Now, lots to talk about before the start of trade today. What do you need to bear in mind? And will that selling continue on to today as well? All of those answers you'll find in the show that's up next, and that's India Market Open. Do stay tuned. This is NDTV Profit.